The EU recently endorsed insurance rules in 7 countries, including the US, Switzerland and Bermuda. During the Global Insurance Forum, we asked Brad Kading about the significance of this announcement. He is president of the Association of Bermuda Insurers and Reinsurers and also briefed us on a panel he moderated, which looked at putting capital to work, regulatory risk and the converged reinsurance business of the future.
So with regard to Solvency II and equivalency, the equivalency is really very important to Bermuda, but for Bermuda it means market access in the end. So for Bermuda, if we meet a Solvency II equivalency test, there will be benefits in group supervision, meaning that the Bermuda regulator will be recognized. There won't be a European surrogate group regulator. And with regard to cross-border reinsurance trade, it means collateral requirements will be waived, which creates some efficiency in offering the reinsurance product. So both Bermuda continues its quest for full equivalency. They continue discussions with the European Commission and EIOPA, hoping for a decision by the end of the year that would have the consent of the European Parliament. So Switzerland is on track faster for that full equivalency decision, but we think Bermuda will get there as well this year. The new capital into the Bermuda market creates market opportunities. So in Florida, as an example, you see the Citizens Property Insurance Corporation used to be the largest property insurer in Florida. It's now shed 50% of its policies in 3 years. That's all because of the new capital coming in. Something similar is going on in Texas. Something already happened similar to that in Louisiana. With flood insurance risk, there's a great opportunity to get flood risk off the taxpayers' back out of the National Flood Insurance Program. So we think a desirable outcome would be to have a write your own company agent be able to go to a consumer and say, here is your NFIP policy, here is your private sector alternative. So let the consumer decide which product they'd prefer to have. So great opportunity there. Outside of the developing world, the opportunity is really to encourage insurance penetration in markets where historically there's not been a lot of insurance purchase just because the income was not available. So the governments in the developing world, as endorsed by the G7, are now encouraging formation of public-private partnerships where there would be some government funding of insurance products, and the role of the reinsurers would be to provide liquidity, provide some risk transfer to leverage the government capital so that more insurance could be sold in that local market. So whether that's the Philippines or Thailand or China or India, some places in Latin America, certainly in Africa, there's already a program similar called African Risk Capacity, which has already paid out its first claim, which has already been successful. So those models in the developing world are models that can be exported, and they're directly linked to the availability of new capital, offering an opportunity for that market to be developed. There is a new mindset with regard to product development with the new capital. So Mike McGavick refers to that as the Renaissance opportunity in the insurance business. Can underwriters look at products before that were less appealing and decide that with a new capital available, the price point might be reduced, which might be encouraging of consumers picking up the product? And if that happens, and you can expand this product and get the benefits of the law of large numbers and get more consumer interest and more consumer benefit that would flow from that. So there is an opportunity. There's also a risk associated with it. Some would argue that the new capital is going to be in silos, that only wants to take on predictable amounts of risk that can be fully modeled, that they won't want to be the experimenters. Others would argue, well, that's fine, put the new capital into those markets, and that then frees up capital that used to be there to underwrite that to do the more innovation side. Cyber is a product that people want to develop. The question is how quickly it can develop, and how do you get the technology and insight from the programmers and the technical developers of these worlds, and then how do you deal with the bad actors, whether they're government actors or just plain common ordinary criminals who are in that space stealing data. So it's complicated, but it's got everybody's full attention, and it's a market that is developing on a very nascent stage today, but people see a great growth opportunity. So new capital is already moving into direct insurance. So you see that with several investments in the US marketplace. So yes, we think alternative capital moves beyond the property catastrophe reinsurance space, moves beyond reinsurance, moves into commercial insurance markets, both liability and property. Whether the new capital takes on liability insurance is sort of controversial in the business, but there are are ventures already formed which are dedicated to making that model work. So the new capital on the property catastrophe space has been in there for 25 years now. Maybe there needs to be a similar development timeline on liability products, but the experiment's already begun. And on diving into the commercial insurance space, that's already begun big time. So alternative capital with traditional capital, we think we are converged. It's time to stop calling it alternative capital. It's all capital that can take on risk. It already has fundamentally changed the reinsurance markets. It will change the commercial insurance market. Some of this capital may leave after a paradigm shifting event, but the important thing to understand is that the net amount of capital will still be exponentially larger than it was before. So we see a long-term commitment of the new capital to the business, and this is here for the long haul. The challenge for those in the industry and the challenge for policymakers is to maximize that capital and figure out how to put it to its best and wisest use.
For more of our coverage of the Global Insurance Forum from New York, visit the RIN TV On Demand Library.